Zaggle Prepaid. Zaggle Prepaid, by the way, is a listed entity, is also now just over a year old, a year and a month and a half or so. And what a performance it has had. Closed 2023 at about 220. It's basically doubled in the last 1 year or so. Lots of new partnerships, tie-ups. Every time we speak to them after the, at the end of the quarter or in the middle of the quarter, there's always something new. And they've been expanding rapidly as well. So the latest is they've signed up with MasterCard. It's a referral program, and the agreement is for 7 years. Let's talk about this in terms of what this does to business and growth prospects. Avinash Godkhindi is Managing Director and CEO at Zaggle Prepaid Ocean Services. Avinash, good morning. Great to have you with us here. Thank you for your time on CNBC TV 18. Prashant this side. So tell us, what does this mean? How does this work, first of all? Because it's a referral. So they will, and this is MasterCard India, right, for the India clients. They will refer their clients to you.
So thank you for having me on the show, Prashant and CNBC. The whole thesis is very simple. When we IPO'd, we were a products company trying to create a robust platform. Today, we are a platform company with multiple products, and the market recognizes it, whether it's MasterCard, whether it's Strada, which used to be earlier Allied, Aon, Hebit. It's gone through multiple avatars. And this is a partnership with MasterCard India, but the partnership is for our software products and our payment products to be taken to corporate customers and other ecosystem entities that MasterCard works with, potentially like banks and other fintech players, both in India and across the world.
So what will they do? They'll go to their clients, and it's like a cross-sell. I mean, they will offer your payment solutions to their clients.
Let me give you an example, Prashant. Like there are a lot of large companies. Of course, banks and fintechs you'll understand, so I'm not going to explain that to your listeners, that's obvious. But a lot of corporate customers also reach out to MasterCard looking for specific solutions, whether it's on expense management, whether it's on rewards, whether it's on vendor payouts. And when MasterCard gets these requirements, they want to work with a trusted, stable partner who has a high-quality platform, right? So they've done a fair degree of diligence on our software, on our capabilities. And we recently have had quite a few conversations where MasterCard has introduced us, and the corporates have really liked what we are offering them, right? And so MasterCard felt it was right for them to partner with us because they keep getting these requirements from corporates and other players requiring for the software, and now they've chosen Zaggle as a partner to be able to provide those softwares.
Any numbers you can share with us? How many clients? I mean, what's the upside because of this?
Too early, Prashant. But the reach of MasterCard. These companies are like global behemoths, and they attract demand from all sorts of players in the ecosystem, right? And it's a 7-year contract, so it's clearly a testament for the fact that both sides are committed to making this a success.
And for every client they refer, you pay something to MasterCard. And what would that be?
Those are modalities which are in the contract, which I can't reveal. Some of it is also to do with so when we launched our co-branded corporate credit card with Yes Bank, it was on the MasterCard platform, right? So all customers that come in as a referral from MasterCard, we are expected to provide a MasterCard payment instrument to them.
Hi, good morning, Avinash. Good to have you on the show. Thanks for joining in. I was just looking at the QIP that you were looking to raise. I think that sort of happened. That intent was made very clear end of October. Can you just tell us what's the thought process? 950 crores, I think, is the sum at play. Why do you need to raise this capital? What will it be used for?
Yes, good morning, Sudhi. So basically, this is an enabling provision. The board has approved 950 crores of fundraise, which is a combination of debt and equity. The shareholder decision is awaited, which should come in by 2nd or 3rd of December. The whole idea is to be able to raise, potentially have an enabling provision to be able to raise a combination of debt and equity up to 950 crores. To grow both domestically and internationally, organically and inorganically.
No, so 950 crores is a mix of debt and equity. We thought the entire amount is going to be an equity issuance. Can you tell us how much would be equity roughly? I mean, what would the split be? And a little more detail on the inorganic growth prospects that you're looking at.
And the timing as well, Avinash, just to wind it down.
Tough for me to speak too much because we still need to get the shareholder approval. Right now, the provision allows us for both debt and equity. It could be completely equity. It could be part equity and debt. It could be, completely debt. So the provision allows us for all three combinations. We are looking at a few opportunities for inorganic growth very intently, and these are conversations which are in progress.
In what spaces, Avinash? I know you can't give us, too much, but at least in what spaces? What are the gaps you're looking to fill?
This is in and around spend management as a space, right? So we are a B2B2C SaaS fintech company. We digitize spends. We have opportunities, wide opportunities coming in across multiple spaces like payments, spaces like, some of them are, loyalty platforms, and some of them are, tech-led platforms for potentially supply chain financing, etc.
Could you buy an NBFC, Avinash?
We are looking at, Prashant, we are looking at high quality companies who have a high quality product, tech-led product, and who have, value to add to our ecosystem customers, right? Today we sit with 3,200 plus corporates.
So that's a yes?
No, I'm not saying yes or no. I'm saying both options are open. We are not averse to a company which has an NBFC license. We're not looking at a traditional NBFC at all. We're looking for companies which are tech-led, which have some significant capability. I mentioned 3,200 corporates, but we have thousands and thousands and thousands of SMEs who are either channel partners of these companies or who are vendors, right?
But there's been no, since this was mentioned during the conference call after the results, and there were a couple of questions by analysts, because that'll be a new thing, NBFC with a company, not a traditional one, but still, an NBFC is an NBFC. They may be digital or otherwise. Has there been any investor pushback, or it's very much on the table?
No, Prashant, I think too early for us to comment on this. All options are open. Investors understand what we are doing. Look, when we started off on our IPO journey, we spoke of corporate credit cards, commercial cards becoming a big play for us through Zoyer and our Save platform, right? There was natural skepticism because people said, hey, you're a prepaid card company, is how they said, with a software platform and software products, and this is a different space. And look, today, such a significant portion of our profits, growth, our revenues come from Zoyer. We are one of the largest players in the corporate credit card, commercial card space, basis spends, which is the right metric to look at that space. And that's all happened in the last year or so, right? Year and a half or so. So the market's confidence that we see from our investors is very high, that we'll continue to stay very disciplined, very focused, execute. And that's the key, and as long as we are frugal, nimble and humble, I keep saying this, we will do justice to our investors. And that's the key here.
All right, and you're teasing us today on the show. You're not giving us too many details, but giving us a sneak peek into a lot. Let's wind this down. Since you spoke about Zoyer, current revenue contribution, what is it? I've seen that it's been increasing, and I think you want to take it to 40-50% in the next couple of years. So what is it currently? How do you see it shape up? And in the near term, before we wind up the interview, what's the revenue growth targets as well as margin profitability just for this year, FY25?
So I'll take the last part, Nigel, first. Good morning to you as well. We are looking at about 50 to 55% growth this year. Mind you, last quarter was about, I think, 83%. So we are well on target for that. And margin levels, we stay at the current levels of around 9 to 10% this year. Zoyer's contribution has been very healthy. It's been very strong. We are seeing multiple use cases emerge, whether it's utility bill payments. Petty cash has just really surprised us to no end. We never realized how much of a pain it is. Something which I think everybody knew, but nobody had really focused on because it's not a glamorous, problem to solve. But it's a deep problem to solve. Any NBFC, AMC, brokerage house, retail chains, organized retail is growing rapidly in India. and this really helps them cover for fraud, leakage, compliance. Just before I came on the show, Prashant was mentioning of this fraud. See, this is a big problem. As you digitize more, frauds will increase, whether it's on the B2C side or B2B to B side, any side, right? So the platforms which are able to curb that, to mitigate that, are invaluable, because what would this gentleman have given for saving that 11 crore? There's no price that you can assign to it in terms of a platform or something which would have alerted him. So that's the value that we're bringing, and companies are recognizing it. So Zoyer is growing very healthily. I can't give you a split because a lot of cross-selling has happened now. So the same customer who used to earlier be a Save or a Propel customer is also taking Zoyer. The same card is being used, the same corporate credit card is being used by the employee for her expenses as well as her branch expenses. And that's what we want. We want more and more spends to come in from the same instrument. And the software is able to segregate that for the corporate.
Right, Avinash, we'll work with what we have. So about 60% growth expected this year with margins in this 9 to 10% band. Got it, and perhaps an acquisition as well, somewhere around the corner. So that's our key takeaway. Thank you very much for the call this morning, and good luck to you with those plans.